sponsored by the Securities and Exchange Commission of Nigeria.
Thank you for joining us on Eye on Nigeria's Capital Markets, the show that tracks activity in West Africa's oldest and largest stock exchange and its broader capital markets. I'm Wale Famirewa, and thank you very much for joining us. In today's program, we continue our look at venture capital and private equity in Nigeria and bring you the stories about how Nigerian entrepreneurs are now finding the capital they need to exploit Nigeria's vast and interesting business opportunities. Developing countries are often a great place to start a new business. Nigeria is no different. From retail to technology, agriculture to infrastructure, Africa's largest economy is a great place for a smart entrepreneur to make a great return.
We notice certain, structural changes in the very fabric of the economy and the society. So the first thing is obviously that we are blessed with a very large population. So we have a large domestic market. This is already a very interesting, thing to have.
Asset prices are falling, not just on the stock exchange, but also, just because of the general uncertainty around the elections, around the falling oil price or oil price having halved in less than 6 months, and of course the insecurity challenges we're dealing with. And for those of us that are committed to the market, this is actually a good time to invest. And therefore we are taking that contrarian view that we're in the market. And frankly, for those assets that we're interested in and those sectors we're interested in, backing strong management teams, we think this is a good time to enter, in other words, to commit to them.
The population is growing. At the same time, we've got a very fast pace of urbanization. Now, anywhere you look at, you will notice that there is a very low per capita consumption or very low penetration for more or less any goods or services. So there is a very low base. So you can say, okay, this obviously provides a lot of upside. Entire segments or even industries are extremely underserved.
However, the latest World Bank's Doing in Business ranking that lists Nigeria as 170th out of 189 countries highlights the challenges facing small businesses. While the latest ranking cites a significant improvement in access to credit for businesses, funding remains a key challenge.
If you look at the SMEs in Nigeria and even the agriculture sector, they've had a very hard time accessing any type of capital, whether debt or equity, historically. 4 or 5 years ago, roughly 0.7% of bank loan portfolio was allocated to agriculture. Last year, that number rose to 5%, which is a great improvement, but still a far cry from where the need is. And of course, the agriculture at 22% of GDP, there's room for more capital to get to the sector.
Funding is tough, period. I think it's tougher here than in the first world countries. I think it's even tougher for technology business like ours. As an investor, if you look at because I did a lot of self questioning in this process of trying to find fund for my business. People in this part of the world are still are more comfortable investing in real estate and all that, traditional type investment vehicles, rather than looking at technology businesses. And at the end of the day is a competition for funds. You have alternatives. Do I do technology or do I do real estate? 9 out of 10 investors in Nigeria will probably still do real estate. So it becomes a challenge. As an entrepreneur, you have a solid business plan. You have good experience to execute. Everything works out well on paper. But to find that investor who is willing to back you and who is willing to see the vision the way you look at it is always tough.
At the beginning, we were using a fabricated equipment. So we needed a modern processing plant. So we had to start thinking of where we will be able to get loan. We had our bankers around then. We spoke to them. And that time, the CACS scheme was out from the government. So we tried to assess these funds. And that it's a loan, a single-digit loan. So we tried to assess it through the bank. It was so frustrating. And they were so slow. and time was not on our side because customers, shops, market is opening and we need to penetrate.
Wole Farun is one entrepreneur that believes in the investment upside that Nigeria presents. In 2013, he returned to Nigeria from the United States to set up an e-commerce and e-payment solution company.
Company is NetPlus Advisory. We're a technology business. Technology is broad, so our focus is software development, which we have will be narrowed down to e-commerce and e-payments. On the e-commerce side, we have a B2B component of our business, and we have a B2C component of our business. We have a flagship multi-merchant platform, which is called WebMolenG, where we help merchants to succeed, to do business online. On the payment side, there's some interesting things that we're seeing in the market as a result of our experience running e-commerce platforms. So we're building a platform that enables users to be able to make payment online in a safe, secure, and seamless manner. In terms of growth, we're very bullish about the way we're looking at this. We think the e-commerce and the e-payment space in Nigeria is at its infant stages, but there's tremendous opportunity. This is a huge consumer market. We have a middle class bracket that is substantial and is growing. More people now have disposable income than they did 5-10 years ago. The fact that we have mobile operators who have close to 60-70 million subscribers with internet access also helps. So we're seeing a lot of development in that space. What we're not seeing yet, top class or world class players who can take full advantage of this. There are a few that we all know, but I think there's more. There's more room for innovative companies to be in that space. I did an analysis about 6 months ago. That space was valued at about $550 million. Today, looking at it again, I think that valuation has grown to about $1 billion in about 6 months. It tells you, the potential in that market. Transaction about 6 months ago, about 15,000 transactions a day. Now is just south of 20,000. It's huge potential. You can see that even in the airline ticketing space, lot of transaction. I look at the payment report that is sent by NIPS every month. You can see the volume of online payment that people are making via POS, ATM withdrawals, internet banking transfer. It seems as if the market is really about to take off. So I think there's huge potential. The banks need support in providing payment channels, in providing payment solutions on the web. We're playing in that space, and I think it's a very important channel to focus. The e-commerce space, for product, for services, there's a lot to be done there. Even for merchants who are selling, they need the infrastructure to be able to take advantage of this.
Wole's business is now poised to rise to the next level with the support of private equity.
We've recently received a multi-million-dollar investment from a private equity fund. Obviously, one of the first benefits is you have the funds, so you can execute on your plans. But beyond that, they bring governance and structure into an organization. Most startups or most early stage companies do not have that, and do not even realize that they don't have that, which is the bigger problem. I'm in conversation with our partners, the PE fund, about some strategic alliances in other parts of the world that may change things significantly for us. Without them, it might be more difficult for us to be able to pull that off. I know we've been thinking about it, but the moment they came in, it was obvious that they could help us close some of those deals. And those are the kind of additional benefit that they can bring beyond just giving you money.
Hundreds of technology companies like NetPlus Advisory now have the opportunity to receive early stage funding from a venture capital fund created by Nigeria's government and managed by EcoVC partners.
While we are sort of not at liberty to share too much detail about a fund because we're technically still in partial fundraising mode, we can discuss the fact that we have a fund available to invest in technology startups in Africa. One of the limited partners in this fund is the federal government of Nigeria, and through that process, we are managing their ICT Innovation Fund to invest in high-quality technology startups.
I think the government's key role is to be a catalyst. So to say we have capital, we're willing to put it at risk with a fund manager, and then identifying which fund manager they believe is appropriate and has expertise to manage those funds. And then with that anchor investment, then to bring private sector capital into the fund. And a number of funds operate that way. So if you look at the British government through a CDC allocating capital to different private equity funds, the US government through OPIC is a similar type of exercise.
Nigeria's Agriculture Ministry is also providing private equity and venture capital funding to budding businesses in Nigeria's agriculture sector.
The Fund for Agricultural Finance in Nigeria, or FAFIN, is a $100 million target agribusiness fund, of which we've raised $34 million to provide equity and quasi-equity capital to agribusinesses in Nigeria. We can invest across the value chain, which is processing. It could be rice, it could be oil palm, it could be cassava. We can do livestock, the broad range from animal feed to poultry to dairy. We can even do storage, packaging, logistics, inputs, so the broad range of agribusiness in Nigeria. The Nigerian government, through the Federal Ministry of Agriculture, has put in $14 million into the fund. The German government, through KfW Development Bank, has also put a matching amount into the fund. And Nigeria Sovereign Wealth Fund, NSIA, has also put board approval for $10 million and have put $5 million into the fund. And we as well have to put in personal capital as well to match what other investors are putting in. So the way this fund is structured and is, one, we're providing long-term capital, 5-7 years, we can do longer, equity-like, and we are very actively involved in helping guide the businesses. We're on the boards, we help recruit senior management team, and we also have a technical assistance facility. So this is grant funding that we can then use for capacity building initiatives. It could also go to helping the firm build an outgrowers scheme with farmers. So there are a number of different things that have been put together with this particular fund that actually help add value and help many of the firms actually grow long term.
After the break, we find out what private equity and venture capitalists are looking for in the companies they invest in, as we continue our look at the evolution of this industry in Nigeria. Most companies in Africa are small businesses with annual revenues of less than $1 million. While the entrepreneurs providing these ventures are often passionate and driven to exploit the opportunities presented by the market, they often lack the knowledge, skills, and discipline to take small ventures to the next level. The creation of special VC funds by the government is a major step forward since the first private equity and venture capital funds were created in Nigeria.
I set up a private equity firm in Nigeria in 2005 in partnership with the Leventis Group, who have been in Nigeria for about 80 years. We raised a small fund, about $50 million, and we started to invest in different entities. Now, it was a venture capital fund, so it was unique. It wasn't a private equity fund, it was a venture capital fund, because we were willing to do small transactions that had tremendous potential in this economy.
In 1997, I then set my sights on Nigeria, being Nigerian and having grown up in Nigeria and also qualified as an accountant with Arthur Andersen before going to business school. And I met up with Dick Kramer, who ran Arthur Andersen till he retired in 1994, but was still here. And working together with other senior partners, we started African Capital Alliance. And I would say, you know, overall it's been a good journey. It's been a very positive journey.
Imagine 100 funds that are investing in agriculture, in just multiple areas, aviation, they're investing in shopping malls. Imagine that, healthcare, education. I mean, I know doctors who need their hospitals expanded. So imagine that.
The need for equity capital for SMEs is palpable in Nigeria. However, venture capital investors don't just provide capital, but also find other ways to add value to companies.
Private equity investment is not just about capital. It's value. It's providing value to the investor, to the entrepreneur you are backing. How do you add value? You add value across various areas. At Synergy, for example, we've identified 5 key areas that we think companies need support to ensure they meet their long-term goals. What are these key areas? One of them is what we call market access, helping entrepreneurs get into markets they could not get into because they don't have the relationships or they don't have the understanding, is critical to growing the top line of their business.
Venture capital really is a lot about hand-holding. A lot of the entrepreneurs don't know what they don't know. We need to help them sort of get to that better, level of knowledge. They don't know how to scale. They don't know how to measure. They don't, but what they do have is what I usually call a high hustle quotient.
So in the first instance, in the company, I mean, you're even making it possible in some instances for the company to exist. We have at least a couple of entities in our portfolio that actually, if we hadn't supported them, they wouldn't be able to exist because nobody was willing to take the risk at that time. And then it's not just money, you're bringing governance, you're helping them to professionalize. In some cases, people have been so focused on running their business, they haven't structured their business to be able to scale. So you're providing them with that guidance and mentoring. There's a coaching that goes on.
With a mostly young population of over 170 million people and 39 million hectares of uncultivated arable land, Africa's largest economy is a land of opportunity for discerning and bold entrepreneurs. Over the last decade, venture capital and private equity has evolved, welcoming a wide range of VC and PE investors.
What we've seen in Nigeria is emergence of other type of private equity type investors. We've seen specialist manager focus on agros or specialist sector like agro or energy also spring up and start deploying assets. Of course, the early investors who are all expansion focused, generalist managers who are, for example, Synergy, continue to become the larger part of the market, who are really sector agnostic, who are more management type, backing management and deploying good capital. We see them. We've seen some leverage buyouts conversations begin to happen, and this is where it gets interesting. Banks are beginning to play a role in leverage buyouts. And 1 or 2 of the international banks are offering managers debt capital to support transactions that they're buying into. So we think that gradually also buyout will also start becoming prominent as well in Nigeria. And so the ecosystem is developing nicely and gradually. So from specialist funds to early stage investors, VC, to growth stage investors, and to buyout fund, which is really the entire gamut of private equity industry.
Nigeria's government has invested in venture capital funds dedicated to funding businesses in the technology and agriculture sectors. Mezuo Unwuneli, the CEO of one of 2 government-appointed managers, tells us what they look for in the entrepreneurs they are prepared to back.
I think the key thing we look at when we're engaging with companies is the passion of the team. I think that is paramount. Just, do they live and breathe their business? And you can really get a sense for how dedicated a person is to their company based on engaging them. Now, separate from the team and the entrepreneur, there are a couple of things we look at. Now, we have our own fund criteria, which says ideally we want a company between $2 million revenue and $30 million revenue, in that range. Couple of years of track record, at least 3. We do growth capital, not early stage. And we look for minority stakes, so effectively backing management to grow their businesses.
Rakia Abubakar is the co-founder and executive director of L&Z Integrated Farms. The company is a good example of some of the interesting opportunities in Nigeria's agriculture sector.
L&Z Integrated Farms is an agricultural operation investment where we have our investment in poultry and dairy production. We have been in existence for about 15 years now. It's a family business based in Kano,
Our maiden investment was in a company we're very excited about, a company called LNZ Integrated Farms. We announced it in December, a couple of months ago. It's an integrated dairy farm in Kano. They have their own cattle herd, but what's even more exciting is that they work with about 500 Fulani cattle herders to source small quantities of milk from each of them every day into their facility. Nigeria imports practically all its milk, and the average person in Nigeria has never drunk fresh milk, and it's not sustainable. There's a growing middle class that is consuming more dairy products. You have dairy companies operating in Nigeria that at some point need to think of local supply chain. And for us, an investment in a firm that has already shown that they can actually build that local supply chain to gather milk from smallholder cattle herders, I think that's very exciting.
When we started this business, we were like, at the beginning when we were getting the milk on the farm, we were like producing 200, 300 to 5 liters of milk. Right now, we're producing 3,000 to 4,000 liters per day.
While most venture capital and private equity investors often begin to search for investments in Lagos, Nigeria's commercial capital, the emergence of companies like LNZ Integrated Farms in other parts of the country shows what's possible for the bold investor that is willing to venture out.
Historically, many private equity funds that are focused on West Africa and in Nigeria in particular have been focused on looking at investments that range from $5 million to about $25 million in size, and they tend to be very Lagos-centric in terms of their approach for looking at investment opportunities. But the reality is that there are more investment opportunities outside of Lagos, and there are definitely many more investment opportunities that are smaller than the typical deal size that many larger funds look at. And so for us, in our sector, in agribusiness, the opportunity is everywhere outside of Lagos. So we are on the road quite a bit looking at the different investment opportunities. Now, for funds that are interested in SMEs and in other sectors, it's the same thing. There are quite a few companies in Kano, in Enugu, in Onitsha, in Ibadan that if the team is willing to go out and actually do the legwork, they're actually companies that are second, third generation run and are reasonable size, reasonably good governance. And there is an opportunity there. And for those funds, the approach is to help build capacity at those firms, work with the firms to grow their businesses, and then the larger funds could then be the exits for those funds.
Venture capital and private equity investing in Nigeria is not for the faint-hearted, as the market presents its fair share of challenges.
Unique challenges that private equity face in Nigeria, there's a number. One, finding transactions, good quality transactions. Finding managers that know what they're doing, have a track record of success. That's sometimes difficult. And then another area is just regulation. Now, we at the SEC have now, as a result of my being on the board, which is as a private equity practitioner, we're looking a little bit deeper into private equity as a tool for development. As you know, the mandate of the SEC is both regulation of the market, but secondly, development of the market. Now, those two things are not mutually exclusive. Those two things have to work together. We need to do everything to spur folks, fund managers, who will invest in small business, mid-sized business, and large business with as little negative impact of regulation on them as possible, while maintaining and ensuring that there's as little fraud as possible.
There are a few lawyers who have done private equity transactions before. Now you have a lot of law firms who are fairly conversant with private equity type transactions. And this helps in deal closing, which can take a long time. It was not usual for a deal to drag as long as 6 to 9 months back then, as you're trying to explain certain rights that a PE firm wants in a deal. I talk about drag along rights, tag along rights, and the guy is wondering, what are you talking about? I just want money. Or the other lawyer is wondering, why are we putting in the agreement? So I think as the market has evolved, general quality, the level of knowledge in the industry, in the support industry, because PE requires some support industry to grow. The advisors, the accountants, the investment banks. That the level of competence, the level of expertise has also grown in that market to be able to support private equity. So from the advisor side, that's very important, and we need to see that more.
Nigerian entrepreneurs have reasons to be cautiously optimistic about the future. The market remains one of the largest and most attractive in Africa, and more government support is coming in the form of special SME intervention funds created by the central bank to provide debt capital at single-digit interest rates. But more importantly, equity capital is also now available through venture capital funds created for technology and agriculture companies. The local VC and PE industry is also demonstrating a capacity to raise funds and invest in emerging businesses. The industry still has a long way to go to match those in most developed markets. However, the boost provided by VC and PE investors to technology entrepreneurs like Wole Faroun and dairy farmers like Rikaya Abubakar point to the flow of capital that must underpin the growth of the small and growing businesses in Nigeria. Wole Famrewa, CNBC Africa.